glad that we're finally on. So you guys, I'm Sandra, and I'm here representing lifehappens.org. Life Happens is a nonprofit organization that would like to educate you and Kim and everyone. It's a non-biased nonprofit organization. And we are so happy to sit down with Kim.
I
And Kim,
so
thank you
happy.
so much
Yes.
for joining us. So Kim, tell us a little bit about yourself and your organization.
Okay. So thanks for having me, Sandra. I am so excited for this conversation. I've been telling my community that we have been talking about financial planning and income protection and all the things. So I just want to let you know that they are here for the knowledge. Okay.
Awesome. Great. Thank you so much.
Like you said, my name is Kim. I created a community called Single Black Motherhood. It was designed because I was looking for a community. I did not have anybody in my corner. I did not know other single moms. I was searching for knowledge and for somebody that looked like me, and I could not find it. And so I created it. I was like, I got to be the change that I want to see. And so that is how Single Black Motherhood was started. And I created it to educate single moms and give them the tools and resources and knowledge they need to improve their overall quality of life. Because I truly believe that exposure provides a lens. And if we can expose them to different environments and, people and things, and they can see what's possible for them.
God, that is so awesome, Kim. I mean, I love that. You sound so passionate about it. And that's what we really want. We want somebody who's passionate about it because knowledge is key, right? And
Mm-hmm.
I was a single mom myself, and so that's why I'm just really excited to be here with you. And so anyway, I just like that. So basically, you are educating all your single moms financially, explaining to them why they need life insurance and all that. So that inspired you because you didn't have a community,
Yeah.
and so you just formed your own community to get
Yes,
everybody.
I did.
Yeah.
Created, like, I started with the podcast, and
Mm-hmm.
then I created the Instagram page, and I started to connect with women around the world. So it wasn't just
Wow.
limited to the US, but moms in other countries started to message me and tell me how much the page was helping them and how grateful they were that they found it in the space here on Instagram. So it's amazing.
Well, that's really neat then. So really, you've had some tough questions that come to you from all these single moms from around the world. Wouldn't you say?
Yes.
Yeah. Do you have any in mind that maybe have come up that you would like to share?
Around life insurance or just
Hmm.
in general? Yes.
Yeah. Well, any of the questions that may have come up around life insurance or their financials or the things that you're passionate about that you just spoke about.
Yeah. So I'd say when it comes down to life insurance, I think the biggest question they have is, should they get term or should they get whole? And I don't think they really understand that it's not necessarily term versus whole, but it's term versus permanent, right? Like
Right.
you talked about, we spoke the other day. And so can you just dive into that a little bit?
Okay. Okay. Well, I would love to dive into that. And because insurance is really a passion. So, we have to think about it. And a lot of people are afraid of it because they just don't understand it.
Mm-hmm.
So, insurance, there's really only two types of life insurance. There's a term plan that's a temporary coverage and it will expire one day. And then there's permanent coverage that lasts to age 121. And, we're saying why 121? Because nobody's lived that long yet. The insurance policies used to expire at 90, then they went to 100, and then people started living longer. So now it's 121. So like you said, you can have a combination of both of those. So a term policy is really good if a person may not have a lot of money. They may have small children. They want to make sure, say you have a newborn or
Mm-hmm.
a minor or small child, and you want to make sure that that child life is secured if something were to happen to the parent. So if something was to happen to the mother, then she's going to lose income. So then there won't be any income to help that child go to college or do some things that they would have been able to do while the parent was living. So they can do an income replacement with a term policy. So say if a person made $50,000 a year, $100,000 a year, and you want to make sure that child is secure until they graduate from college, say 25 years, and the child may be a newborn, say it was 5 years old, you may get a 20-year term. So that 20-year term will take that child all the way through college. And you may do, like if you made 50,000 a year and you want to do it for 20 years, then you would get that amount of money in the policy. You know, you may get $1 million policy, and $1 million policy on a young person is very inexpensive. A lot of people think it's a lot of money, but it's a very inexpensive plan to get because it's a term and it's going to expire one day. So what you don't want to get sometimes are terms that increase a lot. They're called increasing terms. They may start off with a very small amount, but every year.
You you just taught us something new. So you said there is a different term policy called increasing term.
Yeah.
Okay, I just want to make sure that everybody in the comments got that. Are y'all listening? Okay. Go ahead, Sandra. I just had to point.
Yeah. Well, please do just jump in anytime, because I'll tell you, I'll be honest with you, Kim, I can get to talking about insurance and I'll just keep talking. So you have to stop me sometimes.
Okay.
But yeah, so a lot of times people will come to me and they'll say, Sandra, I've got this term policy and it lasts till I'm 95 years old. And I'll say, when you're 95, you're not going to be able to afford it. And they're like, what do you mean? So we look at the policy. You have to look at your policy or do a policy review. Whoever you bought that policy from, take it back to them and say, let's do a policy review. So if you look at the policy, the term policy will show 10 years or 20 years, and the price may be the same. But then at that 21st or 25th and going on, that premium is going to be increasing. And by the time you're 95, that $30 a month policy is going to cost you $5,000 a month. And nobody can afford that. See, a term policy is for a short period of time. And if a person says it, then you have to look at it and see, so you'll know exactly what you have. Like I said, term policies are really good policies. And sometimes it's not bad to get an annual renewable term that's increasing every year. Because, I mean, I will be an example. I used to be ashamed of my story, but God is good. And it's been,
your story, okay?
Yeah. So, like I said, I was a single mom and I always had insurance on my job, right? Mm-hmm. And I've been in insurance all of my life. When I tell you all of my life, but I did property and casualty, business insurance, and truck insurance, not life insurance.
Okay.
So I had life insurance on my job. And a lot of people say, well, I got life insurance on my job. And now I understand that doesn't mean anything. It's great that you have it on your job because it's very inexpensive. And I encourage everybody to get that life insurance that's on your job. But for me, I was downsized. So now that I'm downsized, I don't have any life insurance because it was on my job. And some jobs you may be able to port it and some you can't. So didn't have a job, didn't have any insurance. So I myself got an annual renewable term because it starts off very inexpensive. And so it's really good for somebody who just doesn't have a lot of cash. But it starts out very inexpensive and each year is going to go up. So if you get that plan, make sure you know what you have. And then after 5 or 10 years, you can get another plan or you can get a permanent policy. Okay. So term is good. Term is not a bad thing. It's a good thing to have term. And if you can't afford a permanent policy, start off with a term. But then later on, when your pocketbook gets a little bigger, you start making more money, then you can switch to a permanent plan. Now I'll put a little what do you call it? A little monkey in the wrench, or wrench in the monkey, whatever. So there are term policies out there that are called convertible terms. Okay. So you start off, you don't have a lot of money, you get a term and you want to get really a level term. Then say you get a 15 or 20-year term. Some policies, before their term is expired, you can convert it to a permanent plan.
Okay.
Other policies you may have to wait. You may have to do it within 5 years or 10 years or before it expires. It just depends. But now you can convert it to a permanent policy and you do not have to have a physical.
Wow.
Okay.
Okay.
So, yes, I want people to know with the life insurance, it's based on your health, right?
Mm-hmm.
Not based on your wealth, it's based on your health. So you want to get it as soon as you can because you're as healthier and you're as young as you're ever going to be. We're
Yeah.
not going to be this age anymore. So you
Mm-hmm.
want to get it as young as you are.
Okay.
So that's a convertible term. All right. And
Can
I
we
can
talk
stop some more about
about,
term. Let me ask you a
yeah,
question.
because I want you to go back, Sandra, to talking about the policy that you have with your job, because a lot of moms, they have these policies with their jobs and they think it's enough. And I know you said it's good to have those
Mm-hmm.
policies. They are provided by the employer, but oftentimes they are only one times the salary. You just talked about having 20 times the salary if you want it to last until
Mm-hmm.
the children college or leave the house. And so that policy at the job is often not enough. Can you dive into that a little bit?
Mm-hmm. Well, you're absolutely right, Kim. The policy that your policy at your job, you could get one times, and some companies, depending on your position of that job,
Mm-hmm.
the higher up the managers or the VPs, they may get 10 times their salary.
Okay.
So it depends on the position, how many times that you can get, and usually it's a group.
Because I want to talk about what's included, but then you're talking about like they can get a supplemental life policy, right? They can purchase additional amounts of coverage.
Right. And that's what I'm saying. If you get it on your job, it's very inexpensive. So go ahead and get it because it's going to be real inexpensive. You're not going to have to take exams, so just purchase
Okay.
it. It's really going to be pennies on the dollar. It's very inexpensive. However, while you're this young and you're this age, go ahead and get you a separate plan outside of your job,
Okay.
you know,
Mm-hmm.
because back in the day, people stayed at jobs forever. They retired at jobs 30 years.
Mm-hmm.
But now
We don't
young
do that.
people, you know, they don't do that anymore. They're going from one job to the other. And each time you're getting older as those different changes come about. So what if you just had a plan that just stayed with you forever?
Right.
Mm-hmm.
And then you were talking about the policy review and sitting down and talking to somebody about your policy, how long the
Mm-hmm.
term. And I think for the policy with the job, you need to be very familiar on whether it's portable, right? So you may be purchasing the policy, and even though it's inexpensive, what if it's not portable? Have you had any situations where, an employee couldn't port their policy? Has that been a thing? Or what have you experienced? What have you seen in all of your years of, people having policies with their employers?
Okay. I've seen both. Like with me, mine wasn't portable.
Okay.
Then work with some retirees that theirs is
Okay.
portable. However, they won't get the same amount. So say a retiree had 100,000 or 200,000 on the job while they were working. But then once they retired, that amount is lowered. It's reduced so low. And I've seen some of those
Wow.
policies reduced as low as $10,000. So you've worked at the job all this long time and you thought, well, you had $100,000 policy. Now you're retired and your retirement paperwork says you have a $10,000 policy now.
Wow.
So,
Are they
yeah.
allowed to do that? Like, is there
Oh,
some,
yeah, of course.
yeah,
Yeah, it's legal.
in the policy terms, it's written like that your policy will be reduced.
Right.
Wow.
Correct.
So if you're listening, it's so, so, so important that you get a policy outside of your job. Like, have both of them, but make sure that you get you that policy that's outside of your job. This is
Right.
good.
Right. You just want to have it and then when you get a policy, the person who you purchase it from, just go over it with them. Just don't purchase it. I had a client who her mom got her policy when she was 19, and it was just a $10,000 policy, and she paid on it. Once she turned 70, some of the coverages were reduced, and He said, well, my accidental death was reduced. However, the policy language said at age 70, your policy would be reduced by 50%.
Oh my
So
gosh.
the
Wow.
only reason I'm bringing that up is you have to, read it. And this was a long time ago, of course, and
Mhm.
hopefully they probably don't make those kind of policies anymore. But the reason I'm saying this is because sometimes when you purchase a plan, it's just like anything. You need to understand it yourself, you know. So just read it and understand it. Life insurance is a wonderful thing to have. It helps us with a legacy. And another thing I wanted to say, we haven't even got to this part yet, but life insurance, whether it's a term or permanent plan, will include living benefits.
Okay.
And a lot of people didn't know that. So the companies now are making life insurance where, what's the word I'm looking for? Innovative.
Okay.
It's just so innovative. It's like, back in the day, you had life insurance. It was only for a burial policy, right?
Yes.
It's just like, and we always use this because everybody knows. But, the cell phone that had the cord, you had to stand there and talk on the phone with the cord. Y'all may be too young to know anything about that.
No,
But we had to stand in
I'm
the
not.
kitchen.
I know.
You had to stand in the kitchen and talk on the phone. Well, that's old, antiquated stuff, right? Well,
Hmm.
that's how the old life insurance policies were. People looked at old life insurance policies as being a burial plan only. But life insurance is so innovative now. So if you get a life insurance policy and say you have $100,000 death benefit and you have a critical illness. So critical illness could be a stroke, cancer, heart attack, kidney failure. You can take a portion of your death benefit out of your life insurance while you're living.
Wow.
And that's awesome. So then the other one they include is chronic illness.
Okay.
Some include chronic illness and long-term care. Both of those are kind of intertwined meanings. Chronic illness and long-term care is if you cannot do two of the six activities of daily living. So let's look at this. Activities of daily living is what you do every day. So Kim,
Hmm.
tell me an activity of daily living.
I,
When you get up every day, what do
I
you do?
go to the gym and I exercise.
Oh,
Is that a part of it?
okay, that's traveling, getting up and
Okay.
walking on your own.
Yeah.
That's transferring. That's one. What do you do before you go to the gym?
I get up, I brush my teeth, I shower.
Bathing. That's
Yeah.
bathing. Showering, bathing.
Hmm.
What else do you do?
I put on my
Dress,
clothes.
dressing.
Dressing, yes.
Uh-huh. Do you eat?
I don't always eat, but if I do, I drink a quick protein shake before I go
But
to
you
the.
eat something
Yes,
every day. So
I do.
there are six things that everybody normally do every day.
Okay.
And they're transferring, they go to the bathroom, they dress, you know, shower. There are six things that people do every day. And if you cannot do two of those things, you could take money out of your life insurance policy to help you with that.
Wow.
Because I bet almost a lot of people on this call know somebody that maybe needs some long-term care or some help. And the thing about it with this single moms that your audience, even if a person is married or, single people, I've seen this too. If you're married, most of the times the husband dies first. That's just kind of the way the statistics truth that says. And then the female is left taking care of her husband. Or I've seen single women have to take care of their dads.
Okay.
I've seen that as well. So then who's going to take care of you? And so we have to think about who's going to take care of us. So getting a life insurance, leaving a legacy, but it also could double for that long-term care plan that you need.
Okay. Wow.
Yeah. So life insurance is it's just a really good thing to have. And
Yeah.
people just, think about it. And we're just talking about term. We ain't even got on
Yeah.
permanent.
Yes. Yes. So let's dive into permanent because I think there's so many questions around like which one should I get, or I have both, or I don't really know what my job offers,
Mm-hmm.
and so I think for the job, you just have to dive into those documents, right, to figure out what the job's offers. And maybe you can talk about, Sandra, like what type of policies most employers offer, and then, dive into like the permanent policies and what
Okay.
the.
Yeah. Yeah, most policies that your employers would offer, it's going to be a term because you have a enrollment period, right?
Okay.
So at enrollment period every year, you can pick what plans you want.
Right.
So that's what a term looks like. You're picking it every year. And some of those plans, like I said, when you leave, it may be reduced. They can convert it to a permanent, but it's a lower amount of permanent coverage. When
Mm,
you leave the job and it goes from 100,000 to 10, they converted it to permanent, but they just reduced it. Okay, the term converted it. So then you have a permanent plans. So when permanent plans, everybody used to always think it's just whole life. They say term and whole
mhm.
life, but really it says term and permanent. But whole life is a type of permanent plan.
Yeah.
So permanent whole life coverage is mainly used for like final expense plans. You may have small death benefit, 10,000, 15, 20,000, mainly for your final expenses. So you may hear the word final expense. It's just a whole life insurance policy that's going to last to age 120. You pass away, they'll have that to take care of your final expenses. And then there's another type of whole life plan that you can use to build cash value. You can take whole life and you can build cash value with a whole life insurance plan. There's
Hmm.
a universal life policy, and I don't want to get confused to everybody, but there's universal life and then there's an index universal life. There's a lot of different types of permanent life insurance. And so you would have to get with your agent and find out which one is going to be suitable for you because
Okay.
everybody has different needs and wants. And, some people may just want a permanent policy that's going to last forever and they don't want the premium to ever change. Then you may want a permanent policy that's going to last forever, where you may say, I want to put more money in it because I want to build up cash value. So
Hmm.
it's not for the individual to know what type of permanent plan that they want or they need because you're not an agent, right? So you
Yeah.
have to get with an agent that can explain it to you, and then you can maybe, based on your individual situation, to determine what type of plan would be best for you.
Okay.
But like you brought up earlier, Kim, you could have a combination of both. And I'll explain that because say if you had a young child and you wanted to make sure they got through college and you wanted a 30-year term, and that 30-year term, you got $1 million for it, and it was $50 a month. Just throwing
Hmm.
numbers out, okay?
Okay.
But then you also wanted a permanent plan because you're young and your rates are going to be cheaper. So you may go ahead and get your permanent plan now because that permanent plan, you want to keep it till you pass away. You don't want your premiums to change and you may want to build cash value on that plan. And so there are permanent plans now that, I mean, the university coaches are using these plans. I mean, they are using these permanent life insurance to fund their retirement. It is just so cool. And
Wow.
I'm always interested in the University of Michigan football coach, Jim Harbaugh. And
Okay.
I always tell people, I said, just go Google him. Google Jim Harbaugh's retirement plan and then tell me what you think about it. It's just amazing. It's just, I guess I'm an insurance nerd, so I like reading about that type of
Yeah.
thing. But it's really neat. And I'll say another thing about insurance. When you think about generational wealth, you know,
Hmm.
that's what it's coming from. A lot of people get these insurance policies and they can leave, that wealth that you really don't have, that money in the bank, but the insurance policy is there for your family.
Yeah. So when we talk about, single moms and having life insurance, why is it so important? I know I can talk about this all day, but
Mhm.
coming from you're the expert, why is it so important for them to even just have life insurance?
Yeah. Well, single moms, they really need, and I won't say especially because everybody does, but if
Mm-hmm.
you're a single mom, you have to figure out what's going to happen to your child when you pass away, or if you pass away first. And I always used to say when you pass away, but we're all going to pass away one day, right?
Day.
So we might as well plan for it. They say we plan for vacation more than we plan for, leaving this earth, and we know we're going to leave.
Mm-hmm.
So with a single parent and you have your children there, then you think about what will happen to them if you're no longer there. Who's going to take care of them? So you may have someone that you have designated to take care of your child, but are they going to have the funds to do what you wanted to do with your child?
Mm-hmm.
So they need it. And one other thing about single moms that I'll say, some parents want to list their child as a beneficiary. And if you do that, and I see that a lot, and if you list a child as a beneficiary and you pass away before they're at the maturity age, they probably are not, I ain't gonna say probably, but they're not gonna get the money because they're too young. And
Mm-hmm.
so it's gonna be over that money. So they'll end up, and I've had a case like this where the parent passed away, left the child as a beneficiary, but they can't have access to the money until they're 18. So now somebody else is keeping the child, but they don't have any funds coming in.
Wow, they weren't able to go to court to
Well,
it.
they did.
No,
They didn't go to court. Yeah, they didn't. But if you did, you would have to go to probate court,
mm-hmm.
and I can't even talk on that. I can't even speak what would happen on that. But that's something that you would have to go to court for, because beneficiaries on life insurance, it trumps everything.
Mm-hmm.
There are court cases out there where, and people need to check your beneficiaries, you guys. You really have to check your beneficiaries. Um, there's just cases out there where um, person forgot to change her beneficiary. They got divorced and they didn't want the ex-wife to get it. They wanted the child to get it, but they didn't change the beneficiary. So with them not changing the beneficiary, the wife still got it.
Wow.
The daughter even took the mom to jail to get the money, but the judge ruled that the ex-wife was still the beneficiary and she gets the money.
Wow.
Yeah.
Wow. So it's just so important that they make sure that they have those beneficiaries updated, right?
Yeah. So Kim, let me ask you this. I'm just doing so much talking. I told you I babble too
So
much. But I know you are a strong believer of life insurance. So tell us, like, what's your experience? When did you first hear about life insurance? How did you get into this?
honestly, I didn't come from a family that talked a lot about any types of like money stuff, right? So we didn't even really discuss life insurance. I was raised by my grandma, and so all I knew was a burial policy, right?
Mm-hmm.
They got the policy and that paid for the funeral, and that was it. We didn't know about people leaving behind any money to take care of anybody. The family always picked up the slack, right? If somebody
Right.
passed away, they were going to take care of the kids. But now we're living in a totally different time. And so
Mm-hmm.
I want to say the first time I even started to notice like the idea of life insurance was when I got my first real job, and it said I got basic life. I'm like, basic life? Like, what is that? And so
Mm-hmm.
I Google and I looked it up, and then I learned that, it provides a death benefit. Well, at that time, I didn't have a kid. So I just, got the work policy, right? And
Right.
so when I became, a mom, then I started to look into, okay, what happens if something happens to me, right? Like, who's going to take care of my kid? Well, she had her dad, but then also, I'm a wealth and like, things I do to leave, my kid money to be prepared financially if something happens to me, because I know the type of lifestyle I want her to be able
Mm-hmm.
to lead with regardless whether I'm here or not. And so that is where life insurance came into play, and I started to dig into it a little bit more.
Wow. I love that story. And see, what you said was on the job, you saw it and you went and Googled it.
Yeah.
Now you can
I'm
Google
a
it.
nerd
Yeah.
too, and so I'm not just signing up for stuff that I don't know
Mhm.
about, right? So I'm going to Google, I'm doing the research, I'm listening to podcasts that people talk about money. I'm searching on Instagram, like, what are they saying about insurance? What does everybody have? Do I need to talk to an agent?
Yeah.
All things to become knowledgeable. I'm not just out there hopping in, doing it because, somebody else is, but I got to know myself.
That's what I'm talking about. You're not following the herd. You're just making
Yeah.
it, and you're looking it up, you're reading it, you're figuring it out. And
Mm-hmm.
that's how I wish more people would do it, because, GoFundMe is not life insurance.
I told a story. I don't know if it was yesterday or the day before, and I'll share it here on this live because it's crazy how when you talk about something, but then you have an example in like real time. So
Yeah.
I work with this girl who was around my age. I'm in my early 30s, and she was a nurse practitioner, had 3 kids, and she got the flu, had some complications, had some things happen at the hospital while she was there, and they lost her and could not bring her back. And so now she is gone. Her 3 kids are left behind. And I saw on Facebook where the family was like, asking for donations because the dad is now left with the 3 kids. And I imagine no life insurance if they're asking for money on Facebook. They
Right.
GoFundMe, and they don't look like me and you, Sandra. So I was a little shocked. I'm not gonna lie, because we talk a lot about GoFundMes and fish fries and this and that to raise money for our families, but they're doing it too.
Right.
So it's not just us, like people that look like me and you, but it's also happening in other communities. And I was like, wow, testament of like we need to plan for the future. We never know when we're going to leave this earth, and so it's just so important.
Yeah, it's very important. And that's why, like, Life Happens, they have a diversity committee, which I'm a part of. And we really want to focus on, different communities to get the word out, to let everybody know that nobody knows when they're going to leave. And the thing about it, like the pastor said, and my grandmother always say, this world is not our home.
Listen.
When, yeah, when our children come in, that's when we should cry, because we don't know what the future brings. But when a person passes away, you should rejoice because they don't have no more worries.
Nope.
And the thing about it, you want to plan for that, because you don't want to put that, and I'm gonna say it's a burden. You don't want to put that on somebody else. And
grieving, because you got to try. You can't grieve because you got to figure out the financial part. So that slows down the grieving process, right? You can't even grieve properly because you're worried about the money. You got anxiety. You don't know how you're gonna pay for the casket or nothing.
And so we just need to get that word out to everybody, and just have him call your agent, get a quote. You'll be surprised at how inexpensive it is. So in life insurance is just, there's so many different things that you can do with life insurance. And this is this happened to me just today. I had a person call, a physician who had a permanent plan a long time ago. COVID hit, and they said they didn't have anywhere else to get the money but their life insurance policy. Wow. So they went to their life insurance policy. They had that policy for 15 years. Went to the life insurance policy and was able to take a loan from the policy to keep their business going during COVID. And their plan is to pay it back within the 7 to 8 years, so they will still have the money for retirement. Now that is just cool, because if you take that money out of a permanent life insurance policy, you're not going to pay taxes on it, because you're taking it as a loan, so it's not going to show up anywhere.
Yeah.
And so the wealthy people have been using this forever. And so it's just time for everybody to use it. Like, you may not be able to afford to put in what somebody else does, but you may have a budget to put in where you can afford it. And then you can start off with a term policy until you can build your way up. It's just taking baby steps at a time until you get there.
Yeah. So would you recommend, like, for a single mom that say maybe listening today, right? And feels like she may not have a lot of money. She may only have like $20, right? To put towards a policy. Should she start with term and then, make sure that term policy can be converted, or is that going to be dependent on her financial situation? Like, what should she do right now? Is it just to start with an agent and get the quote? Is it to consider, like, what should she do?
I would suggest she not consider, but purchase.
Okay.
So you would get an agent, take action. don't just consider, do it, because what you think, I mean, I can't make up my own verse, but he who thinketh must do it. So the thing about it, get a quote, because like I said, it's not based on the financials per se. They're going to ask on the application how much money you make. And they ask that because companies don't want to give you like 10 or 20 times a certain amount of insurance if you make a certain amount of money. That makes sense. So sometimes they'll ask your income because some companies may give you up to 20 times your income or 10 times your income. So that's why they ask. But life insurance is based on your health and your age. So again, this is the youngest you're going to be. So if you're a single mom, even if you're strapped for cash, get a term policy, because I'm telling you, it's going to be very inexpensive. And then if you have any health conditions, still don't not get it. Talk to someone, because there's so many companies out there and they have underwriting guides. They look it up and see what kind of health condition you have, and go to a broker or someone that may represent different companies. If somebody may represent one company, then go check another company out. Just because one company won't write you, there's so many companies out there, and they're good companies. Insurance companies have been around forever. And if something happens to an insurance company before they not pay their claim, because I've never heard of an insurance company not paying their claim, never, because another insurance company is going to buy them out. I've seen my great aunt passed at 92, and I wrote a life insurance policy on her when she was 84. She kept saying that she had life insurance, but she liked me. And so she let me come in. I wrote a policy. And when she passed away, those policies she had, we found them. And they were written with some companies, and then new companies bought them. So it was good. But the thing about it, those policies had lapsed a long time ago. So you really have to even look at your grandparents, and if you have older parents, see what they have.
You know,
You know.
I was thinking about that, like when I go home for Christmas, just
Mm-hmm.
sitting talking to my grandparents, because I honestly don't know what they have. And I'm asking my grandma, well, what does the burial policy say? Do you have the documents? It's like they just pay the guy at the funeral home. And so, it's just crazy. But this is like real life, right? And so I think we need to have more conversations, around the table about what types of policies we have, where the documents are located, and who is responsible if something happens to them, right? I think it's important to have those conversations.
And what you said, Kim, is a different type of plan. When you said like a burial plan at the funeral home, some of the people would just buy that, because all that's going to do is pay for your funeral or burial up front. It won't do anything to leave a legacy or anything like that.
My great grandma, when she passed away at 86. She already had everything picked out. Everything was paid for. But she didn't leave nothing behind. But we didn't have to pay for anything, like had everything covered. But she was not thinking like generational wealth or leaving behind a legacy. And so, like you said, if we have these small kids, like she didn't have small kids, obviously she was 86, but it would have been nice to leave behind the grandkids, great grand something. And so, it's like we're learning now. We have all of this education. We have all of tools and resources. And so when we know better, we should do better.
Right. And when you said that, it brought up a really good, another example I'm thinking about of a client. But she had told me her parents didn't have much, but when her dad passed, he left $1,000 to all the grandkids. And so she's a single mom. And she said, if my dad, who didn't have anything, could leave $1,000, surely I can leave $5,000 to my kids. And, she got $5,000 for each one of her children that she wanted to leave. Then she got $15,000 for her burial. And so that's what the total of her policy was. Wow. See, sometimes you have to have in mind, what do you want the life insurance to do for you? Some people get it, but you have to say, what do you want it to do for you? And that's what she wanted. And I thought that was just pretty cool, because when you talk to an agent, you need to find out what do you really want the life insurance to do for you.
Mm-hmm.
And thing, yeah. Yeah.
Yeah. So, does anybody have any questions that's listening? We've been doing a whole lot of talking. So, if you have any questions, please feel free to drop them, and I will read them for Sandra so that she can answer your questions. But while we're waiting for them to, share any questions that they might have, for those moms that you recommended they start off with the term policies because they may not have a lot of money, what about when they do start increasing their income? Because that's one thing that I talk about a
Yeah.
lot in my community. Like, you got to increase your cash flow,
Right.
right? You got to continue to
Right.
increase your income. And so they're not going to be, at this place forever. So how often should they be checking in with their agent to evaluate if the policy they have is enough?
Yeah. Well, a lot of times we do annual
Okay.
reviews, but sometimes that may be too soon for people. And some people really don't want to even see us every year. But, when their circumstances change, if they get a new job, when they have a new child, there's addition to the family, if they get married, if you have anything like that that happens in your life, any change, you really want to reevaluate your policy. Sometimes you have a beneficiary and one of them pass away. That's happened. You had a beneficiary on the policy and they pass away, but you might not even be thinking about changing that beneficiary. But if you have an annual review, it may come up because you're going to check your beneficiaries.
Mm-hmm.
So try to get with your agent maybe once a year or every 2 years, but just don't write the policy and never think about it again.
Okay, so we have a question, and Love My Jalen says, "What are the benefits of getting life insurance coverage for your child?" Okay, so this is something we have not talked about, right? Like, what does that look like, and what are the options for her if she want to get life insurance for her children, or is that even necessary? Like, does
Oh,
she need?
this is such a good question. I'm so glad because we didn't even talk about that. So thank you so much for that question. Getting life insurance on your child. Wow. Your child is so young right now, right? So life insurance on a child is so inexpensive because it's based on age.
Mhm.
So when you get a child, it's best to get life insurance then and get a permanent plan because that price could last them forever. And it will never go up. So with the child plans, there are so many other ways to do it. You can get a policy on a child and pay it up. You can pay that policy up in 10 years and never have to pay for it again.
Wow.
Yeah, I did one on a lady probably 6 years ago, and she got it on an adult child. And the policy premium, I shouldn't tell premiums, everybody's different, but it was less than 600 a year for a $50,000 policy. And it
Okay.
was paid up in 10 years. So think about that. So you're probably paying $6,000 for a $50,000 policy. And that policy is going to be paid up in 10 years, and then it's going to still be accumulating a little cash. That's
Wow.
investment. So you can get policies that are paid up, and a lot of people didn't know they could do that. You can pay up a policy. So that's one reason to get it on a child. I have a lot of grandparents get policies on their grandchildren and just pay them up in 10 years, and
Mhm.
it's be paid for. And I have parents getting them as well. Then I have some parents that I'm working on one now. They're getting policies on their minor children, and they're putting more money into the plan so we can build more cash in that plan. And so they're doing it to let that person, their child, have money when they grow up. So that's another reason to get it.
Okay.
Mhm.
Those are all good to know. Now, do you recommend, like, once the kids are like 18 that the parent transfers over the payments of the policy if they didn't pay it up? Like, how does that work?
I wouldn't recommend 18 because they're still kids.
Yeah.
Maybe after they graduate college
Hmm.
and get a job, then you can transfer the ownership over to the child. But you
Okay.
want them to be responsible. I wouldn't even say an age. I would just say once they're responsible,
Okay.
and then give it to them.
Okay.
And then they could keep on paying it and they'll have that plan. And the purpose of doing it is say they gotten sick. you know, things happen. We don't know what life has to hold for us. But they could have had that policy on their child when they were very young, and then they become an adult and something happened. They got sick or whatever. We don't know. But they would never have to qualify for life insurance again because the parent or grandparent got them a policy when they were young.
Right. Wow. So now that permanent policy that they get when they're a kid. Now, what if they end up getting like a critical illness or something like that? Is that the same thing? Like you were saying, they're still covered because they had it when they were a child, or does that change
Oh,
things?
no. The policy is a contract. And I let people know life insurance is a contract. That's a contract between you and the insurance company. So
Okay.
whatever in that contract, that's what's going to stand. So when you get a plan, it's cut in stone. It's a contract. That's contract law. Now, if the insurance company changes that contract, then it's not going to affect you. It's going to affect the next person that gets that plan. And I've seen that. You know, some companies issue this policy and it may be have all these things included. But if you got that contract, that's the coverages you have. But the next person, if they changed it, the next person will have something different.
Okay.
Yeah, yeah. Let's see here. So let's see what else. Do you have any more questions from anybody?
Just
I've got a
how
question. I don't know how to look at it.
were any questions? There is a question bubble at the bottom, Sandra. You can look on your screen to see if
Oh,
there are questions. Somebody asked if you are a captive agent. I'm not sure what that is.
okay. Well, I'll explain that. A captive agent is an agent that represents one company. Then you have other agents that are brokers, and we represent multiple companies. So that's the difference. Mm-hmm.
So I guess someone was interested in which type of agent you
No, I'm
were.
a broker.
Oh,
Mm-hmm.
Sarah, tell us a little bit of your story. Like you didn't share why you got into life insurance, because you started off at the beginning and you were saying you used to work with different types of insurance, right? And
Yeah.
then you ended up in the insurance space, and now you're really passionate about, you know, educating people about life insurance, that you even got on this committee because you so passionate about it. So tell us a little
Yeah.
bit.
Well, like I said, I started insurance forever. I mean, I was 19 when I started working in insurance, but it was property and casualty, buildings, commercial, business owners, truckers, that type of thing. But when I lost my job in 2000 and I don't even know now. I think it was 2012. No, it was 2010.
Okay.
I lost my job in 2010. So in 2010, when I was downsized and I thought about the insurance that I didn't have, and I had to get me some insurance because I'm like, even though I never did life insurance, but I've been in the insurance and financial industry all this time, and now I don't have life insurance. So it made me get life insurance. And so I started working with some my planner at the time, and I started talking to these women, and they would tell me that they didn't have anything because they didn't understand it. They said people would try to sell them something and they would purchase it because they thought they needed it, but they didn't understand it.
Wow.
And so my goal was to educate these women so they'll know what they need. And part of that education is I found so much about what permanent life insurance can do. And that's why I say it's good to have a little bit of both or one or the other, but start off and get something because you've got to have the money saved. And for me, losing a job, you know, being a single parent, then I wanted to make sure my kids were taken care of. If something were to happen to me, then I had my savings. So, you know, I had to go through downsizing a house that I had built, and I just kind of went through a little depression.
Mm.
But then I realized that wasn't God's plan for me. This was God's plan for me. And so to be honest, I just feel like I'm not even working. I like educating people and trying to help people as much as I can. So when I saw Life Happens diversity team, I was like, I want to be a part of that. You know, I want to know what I can do to help our community to buy more life insurance because it's just such a wealth builder. it's long-term care. You know, my grandmother and my great aunt both ended up with dementia. I volunteer for the Alzheimer's Association because of that, you know, and seeing that. So I do a lot with them as well.
Okay.
But so when I look at life insurance, you can get this long-term care in the policy without having to purchase a separate plan. And so I just kind of just dove into it and did all this reading and took all these classes and all of that because I wanted to be equipped to educate all these women who say they don't know what insurance is. And, you know, I just talked to a couple last week and they said, Miss Sandra, I wish I knew that a long time ago before I got this plan that's getting ready to expire because they didn't even understand it. They just knew they needed life insurance.
Wow.
And I applaud them because they got it. But that's, you know, that's my story. I didn't plan on doing it, but it's God's plan.
Yes. Okay. Awesome. I love that. So there was a question, and she wanted to know if she could use the cash value of a policy for the final expense of a loved one. So just say, you know, she had her policy. There's a cash value in her policy, but she wants to use it for someone in her family.
Yeah. I mean, you can use the cash value in your life insurance policy for anything you want to use it for. And that's the deal with life insurance. It's not like a credit card or anything where, you know, if you got bad credit, you can't get the money. The cash value in that policy is yours. And when you call the insurance company to take it out, they're not going to ask you why you want it. The thing about that, if you're a young person who asks the question, you would want to pay that money back. So you will have it for retirement. And so that's the only thing. And I tell people to look at their life insurance policy as if maybe it was a credit card or the bank or the credit union. If you borrow money from somebody else, you would pay it back. But I've had people borrow money from their policies and they'll say, why do I need to pay it back? It's my money. If you had money in another plan or 401k, you couldn't hardly get it because you'll get penalized.
Mm-hmm.
So if you take the money out of your life insurance to do whatever you want to do with it, then just pay it back.
Okay. So a couple of other questions. So we have one, if somebody is interested in joining the diversity committee with Life Happens, do you have, you know, instructions on how they can do that and get involved? Like we have some agents here in the comments that are also interested.
I don't. I can have them reach out to you or to them. But to be honest, I saw it on a social media post years ago and looking for it. And so, like I said, I'm just trying to do what I can do to help. And I saw the social media post and I responded to it.
Okay, awesome. So maybe if they're interested, they could just DM Life Happens and they can send them further information. Yeah. Okay. And someone else had a question about whether they can book a session with you.
Well, I can't. I'm here representing Life Happens tonight. And so I'm not promoting myself. Yeah, I am. Like I said, Life Happens is nonprofit. And they really want to just give information out there. And I don't want to do that on this call. But I appreciate you, though.
Yeah, so you're not here to get any services or do any of that, but simply to educate and answer your questions. So as my grandma is 74 and doesn't have much of an income, what do you suggest for life insurance? She doesn't want her to pay more than what she get back.
Okay. So basically, she'll get a final expense plan, you know, and like I said, it's just going to depend on her health. But there's going to be a policy out there that's going to write her. And I'll tell you, we had a 90-year-old or 89-year-old that we found a policy for.
Oh, I love that. Always, like it's too late, right?
Yeah.
Like it's too late to get a policy, but you are here to tell us that it's never too late, right? Yeah. And to get started today. And if we have members that don't have policies, we need to get them to also get their policies.
Right.
So is there an age limit for long-term care? Does it need to be done before a certain age?
The earlier you get it, the better. So if you're talking about an age limit for somebody who is older, some companies do have a cutoff, like 75 years old. So that's a traditional long-term care plan. But if you go with the hybrid plan, that's life insurance, some of those policies go to 80 or 85 and they can still get long-term care. We just did a hybrid life insurance policy on a 75-year-old. And with that plan that she got, 80% of that death benefit could be used for long-term care.
Okay.
And yeah, so she was 75 and she got classified as preferred non-tobacco.
Wow. So I just want to clarify, Sandra. So we have, the life insurance policy, and then we have a long-term care policy. But I think the way you were explaining it is that you can have the long-term care included in the life insurance policy. Is
Right.
that correct?
That's correct.
What
Because you can have, I'm
situation
sorry.
I'm sorry. I guess this question was a little long, but in what situation should the life insurance policy and the long-term care policy be separate? Because, like, just think if you're doing this at your job, right? They always have these add-ons of like short-term disability, long-term disability, all of that. But then you might have a policy outside of the job that includes that in there. So, how do you make the best decision on, should you have both? Should you have one over here, one over there? Should it be combined? There's just a lot of different ways you could approach this.
Mm-hmm. And you're right, because like I said, it's different ways. If you get a traditional long-term care policy, then those plans are just for long-term care. All right. You're going to get an amount on a monthly basis that the company's going to pay monthly basis. So
Okay.
that's a traditional long-term care. But a lot of people wasn't buying those because the long-term care companies was going up on the rates and things like that. So the life insurance companies came out with these hybrid plans. So these hybrid plans, like I said, you can get, say if you had $100,000 worth of life insurance, one of the plans you can get up to 80% of that to pay for long-term care. So instead of getting a monthly stipend from a traditional long-term care, you could get a life insurance that's going to give you a death benefit if you don't need long-term care. If you do need long-term care, you're going to get 80% of that death benefit. And if you don't need either one, some of them have cash value built up in it. So I've had clients that would accept, that would want just a traditional long-term care plan.
Mm-hmm.
And then I had other clients that want the hybrid long-term care plan. They'll just look at the two and then they'll just decide which one is best for them. And not one is better than the other. It's just, it's just kind of like cars. Somebody may want a sports car, somebody may want an SUV.
Mm-hmm.
You have to just kind of look at it and compare it. And then what can you afford?
Mm-hmm.
Price on it,
Mm-hmm.
see what the limits are. You can you can Google cost of care. If you go on Google and Google cost of care and you put in your state, it will tell you in your state or zip code what's the average cost of long-term care. And it's expensive as crap. I mean, it's really expensive. So, then you kind of go back and look at your policies and see which one you may want. I know that's
Okay.
not a correct answer, but that's how people normally choose it. They'll kind of look at it and see what the coverages are and then make a decision there.
Okay. Now, when somebody is looking for, a company to purchase from, like, should they get different quotes? Should they just go with their family's recommendation? How do they pick a company that is good for them in their personal situation?
Well, you can look at ratings of companies. Uh,
Mm-hmm.
Companies are rated with A, A minus, A plus, B, B minus, B plus. So companies have ratings. They can look at that. You can look at how long a company's been in business. But like I said earlier, insurance companies, if they have a problem financially, another insurance company will purchase them. You know,
Okay.
so it's not like you get a policy from an insurance company and you're worried whether they're going to pay it or not, because they will pay it. Insurance companies are regulated by their state
Okay.
insurance. And so if they're state regulators, and they will pay it. Like I said, if something happens, insurance companies have to keep so much money in reserves to pay their claims. They have to have like 10 times in reserves to make sure they have enough money to pay their claims. And like I
Okay.
said, it's a company that hadn't been in business that long and they have financial trouble. Somebody's going to buy them. You know, I haven't never read anywhere where an insurance company didn't pay. That just won't happen. Yeah.
Yeah.
So,
So Robbie said, "Wow, so you'll still have your policy if another company buys that company." I think you explained this earlier, Sandra, when you were talking about your aunt or
mhm,
somebody, and you had a policy from another company, but somebody brought them out, and so she was still able to use her policy. So
mhm,
yeah, you can still have your policy.
right,
Now, I
right.
do want to ask Sandra, because you mentioned you were a broker, right? And we talked about how they should reach out to an agent. Now, can they work directly with a broker instead of an agent? And what are the benefits of working with one over the other?
Yeah, and I use the words agent and broker interchangeably, so I apologize for that.
Okay.
But like I said, an agent normally works for one company, and the
Okay.
broker normally can represent
Mo-
multiple companies.
Okay, that's
So,
like a
yeah, so that's the main difference in an agent and a broker.
Okay, and then somebody is asking, is like, what does Life Happens do? And so, Life Happens is a nonprofit organization that simply educates Americans on getting life insurance. Like, that is their sole purpose and mission. If you go to their website, they have tons of amazing resources. They have stories from families and couples and single moms and people that have had to get insurance or they didn't have it, and they share their stories. So it's just a really valuable resource that you guys can take advantage of. Even on the website, they have life insurance calculators. They have an agent calculator. I'm sorry, an agent finder where you can go
Mhm.
on there and put in your zip code and you can find somebody in your area. It's just really good. I've shared it with my community. I've even
Mhm.
went on there, and learned some things.
Right,
So check it out.
right. In Life Happens, they just have a plethora of information. I met this agent, and he said a long time ago he used to get the Life Happens DVDs and just take it over somebody's house, buy a pizza, put the DVD in, and then Life Happens would explain it to them. But now you don't have to do that. You can just go to lifehappens.org and they have all these videos. And it's just really awesome. They have so much educational information on there. And everybody just wants to be a part of Life Happens because it's a really good organization. They have a lot of speakers that be on there. They have a lot of representatives that will represent them. They reached out to Kim. It's just you want to
Yeah.
have people involved that has life insurance, that want to educate others on life insurance. And that's what Kim is doing. She's has life insurance and she's educating her community on life insurance. And Kim, I know we're kind of going over, but tell us, like, what does life insurance mean to you?
Life insurance means peace. It means security. It means generational wealth. It means legacy. So many things. And I just can't stress enough, like the importance of people getting it. So today, like I encourage you, if you are listening on this call and you do not have life insurance, take action today. Get on your computer, go to lifehappens.org, find an agent in your area, or read up on the information, like what is term, what is permanent. Like, get educated, get familiar with it, and reach out to somebody. I mean, obviously it's nighttime, right? So you might not be able to get an agent, but do the research tonight and call somebody tomorrow. Okay.
Well,
That's
that's
how.
awesome. That was going to be my last question. What did you want to others to take away from this Instagram live? And you just told it right there.
Yes, Sandra, you have helped us today. Okay, you
Thank
broke it
you.
down a lot of stuff, and I think the most important things, if like we could just wrap this up, is like there are two different types of policies. So there's term and there's permanent. Okay, permanent can be broken down in several ways. In order to find out which is best for you, you need to speak with an agent. You're not qualified to make that decision on your own. Okay, if you don't take it away from this, that. And then that you need to review that policy after it's been written, right? Don't just sign and start paying for that policy without knowing what you have, okay?
Very good,
All
Kim.
right.
Very good. And review your beneficiaries.
Yes, review those beneficiaries, because what? If you have a kid, listen.
I think I lost your sound. Okay.
All right.
So thank you guys so much, Kim. I appreciate you for doing this live with Life Happens. And I hope we've answered a lot of questions from your followers. And I just appreciate what you're doing with the community,
No,
with the single women.
thank you so
Yeah,
much for having me.
I
And
loved it.
Life Happens for also, partnering with me to get this information out. I definitely think it's necessary. I would know that some moms in my community have gotten life insurance because of this campaign, because of the work that Life Happens is doing. And
Right.
so I just hope that, people continue to tap in and get this knowledge. So
Uh,
any words, Sandra, before we go?
any final words, Kim?
Yeah.
I don't know if I have any final words. I just think that I love the questions that people ask. I'm glad that people tuned in to get the information, because I just heard so many people say they didn't understand it. And so we want to just make sure they understand it. And please visit lifehappens.org. You'll get a lot of information from there. You can find agents, like Kim said. Just take action. Just don't think about it. Just do it.
Can't afford not to get this life insurance,
Just
okay? So
do
you
it.
can't afford it, you can afford it. Go talk to
Oh,
somebody.
you can afford it. Now, if you're going to get Starbucks, or if you just bought a new pair of shoes, you can afford a life insurance policy.
Listen, they find money for everything else, right? Since they find
That's
money for
true.
college.
Yes.
Okay.
They're
All
gonna
right.
buy, people are gonna buy what they want. So buy life insurance. So that's all I have to say.
All right. So get life insurance.
All right.
That is, and thank you
Thank
so much for joining us. This has been so great, Sandra, and everybody that has joined us tonight. So we are going to end this, but if you have any questions, please feel free to reach out to Life Happens. They are here to educate you and point you in the right direction of the resources that you might need. So take care, everybody, and thanks again for tuning in.
All right. Thank you guys. Bye-bye.
Bye.
Let's see. I don't know how to end it. Let's see here. What do I push to end this? I don't want to mess up. I do the X. Okay. Okay, Corey, do I do the X? I don't want to mess up.
Okay. Is there like an X thing at the top?
Mm-hmm. Click that.
Yeah.
Okay, Corey, do I do the X?
Yeah.
Okay.